Welcome back to Your Real Estate Voice with Barb Schlinker, the weekly radio show that informs and educates you on how to buy or sell real estate with Barb Schlinker, the owner of Your Home Sold Guaranteed Realty. Now, Barb, with the interest rates going much higher than in the past 10 years, buyers are looking to get into homes with lower payments. Why are VA assumable loans attractive to buyers, and what are the pros and cons of those assumable loans for home buyers?
Well, Richard, it's interesting because we haven't really seen assumable loans, people talking about them for decades, really. I mean, after the whole mortgage meltdown in the early 2000s, the rates weren't that bad back then. I think they were before the meltdown, they were around 6. So even during that time, people weren't talking about assumable loans. I remember some of the older agents when I was in business at that time were talking about how cool they were and stuff like that. So then, starting after the meltdown, the rates dropped down into the twos and threes, and they stayed that way until 2022. So a lot of people right now that were served in the military that use their VA benefits to get a government loan guaranteed by the Veterans Affairs have really low interest rates. I'm talking two and a quarter, two and a half, 2.75. Probably the highest ones I've heard lately are about 3. So all VA loans are actually assumable, even if the buyer for that house is not a veteran. Did you know that, Richard?
I had no idea. No idea at all.
Yeah, so those are great loans, actually. The only downside for the buyer is let's say the price is 500,000 and the loan balance is 400,000, they're going to have to come up with a difference in cash. So these buyers, in most cases, are going to need to have cash to make it work, but their payment is going to be so much lower than it would be at the current rates for conventional loan, which is around 7. So the buyers assuming a VA loan do have to qualify for the loan. So they'll be working with the lender who gave the loan, and basically they will make their application with them. They don't have to be a veteran, but if they are a veteran, they can also assume it. And sometimes they might have VA eligibility that they can replace so that the veteran leaving doesn't have to worry about it at all, or maybe they don't. It doesn't matter because if the veteran that is letting the loan be assumed moves on to buy another house, they still have VA eligibility available to buy another house using their VA. The other thing that's great about assuming a VA loan is the closing costs are negligible. So just so you know, a typical amount of closing cost on a real estate sale is running approximately 2% of the loan amount. Now, that does not include if you're buying down the interest rate or trying to get the payment lower by paying what they call discount points. That does not include that. So, as an example, $500,000 house, a buyer's going to spend about $10,000 in closing cost, 1% loan origination. Appraisal fee is $750. Underwriting fee $750. 1 year of insurance, maybe $2,000. Prepaid taxes and insurance. Very quickly, they get up to $10,000 without buying the rate down. But in the case of a VA loan that you're assuming, the underwriting fee is $300, not 1% of the sales price. There is no appraisal fee. In fact, the appraisal is done internally based on a online automated valuation. And the only really other closing costs the buyer would have to pay would be like if they're putting new homeowners insurance, which they would put new homeowners insurance on the property plus prepaids. So it'd be more like worst case, less than 1% closing cost to assume a VA loan. Now, what exactly is that? What does that mean? It means that a VA assumable loan is when the buyer takes over the payments and the term of the existing VA loan. So if that veteran had been paying for 4 years, they're not going to have a 30-year loan that they're assuming. They're going to have a 26-year loan if it was a 30-year loan. Um, And it's usually issued to veterans who served, or they could be active duty members. And the government offers both low rates, and they guarantee the lender that if the borrower forecloses, that the lender will be made whole. That's how the military and the veterans are able to buy homes zero down, because the lenders are guaranteed 25% of that loan amount if something goes sideways. But in the case of a VA assumable loan, the buyer does not have to be a military veteran. So, why would a buyer want this? Well, right now, the interest rates as of this recording, conventional 30-year fix is about 6.75%. So, if the buyer has a down payment and they are able to pay for the difference between the loan amount and the purchase price, they could basically submit to assume their loan, and they bring the down payment to closing, and they just take over that veteran's loan that has a very low interest rate, and they start making payments to it. Over the life of a loan, assuming a VA loan, comparing the rates now to the rates back when these were issued, it literally saves that buyer anywhere from $250,000 to $500,000 over the life of the loan. It is a massive gift to that buyer. So how does a buyer find these? Because if I was a buyer right now, I'd want them. I definitely want an assumable VA loan. First of all, the buyer has to be an owner occupant. So this is not for investors. Investors cannot assume a VA loan. They have to intend to occupy the home. Our local MLS actually does not allow us to put details about an assumable loan and the payment, principal, interest, taxes, insurance, and balance. They won't let us do that on the publicly facing comments in these listings. So you actually have to ask realtors to get it. However, I have a way around it with the marketing that I do to make sure that information is available to the public. The good thing about allowing a VA loan to be assumed is, number one, for a home seller, it makes that home the hottest home on the market, essentially. The credit reporting that was taking place for that buyer to assume that loan, it stops with the seller and starts with the buyer when they're assuming it. So if that buyer that assumed the loan happened to miss a payment, it would not hurt the veteran's credit, it would hurt that buyer's credit. It will affect their VA eligibility, just a small amount. But I have had customers just in the last year or so that have allowed their home to be assumed by non-veterans or people that didn't want to replace their VA eligibility. Okay. And they were still able to go buy their next house and use their VA at a pretty high price point and be able to use their VA again while their VA eligibility or a portion of it was being used or left behind at that house before. So what if the buyer that assumes the loan forecloses? That's the worst case scenario. What happens if that happens? Basically, it could affect that portion of the VA eligibility for the veteran. It means it may not be available unless the veteran pays money to restore it. But it will not affect the veteran's credit. So, and if a veteran is assuming a VA loan at that low interest rate, then that veteran could substitute their eligibility, and the selling veteran is completely out of the deal completely. So it really is a massive financial gift for the buyer. And it's also, if you're the seller, it makes your home stand out way above other properties and sell way faster because you're offering this massive benefit to somebody that wouldn't otherwise have it. So if you're interested in finding out more about that, give us a call, 719-301-3900, or go to barbhasthebuyers.com. My name is Barb Schlinker with Your Home Sold Guaranteed Realty. Barb has the buyers team. And what we're talking about is why VA assumable loans are attractive to buyers. And when we come back, we're going to talk about the pros and cons of pursuing those and a little bit more detail about it. Richard?
Barb, we're talking about the pros and cons of assuming a VA loan. So, what are some of those pros and cons of doing this versus just going out and getting new financing?
Well, Richard, the benefit to the buyer is they're going to walk in the door with a very low house payment, and it's a massive savings on interest. As an example, I sold one last year. The sales price was it was on the higher side, 1.1 million. The loan amount was somewhere around 600,000. The seller allowed the buyer to assume the VA loan. So he brought the difference in cash, but he walked in the door with a mortgage rate and they took over the payments of that loan. So he walked in the door with maybe, 4 years already paid on that mortgage and a payment that was less than half of what he would have if he got a new loan right now. And it allows a buyer to basically afford a better and larger home. Um, some of the issues for the buyers is it may require a substantial down payment. And the other con of this is it takes anywhere from 45 days to 120 days to get approval on the assumption because we have to go back to the original lender and they all work differently. I did one that took they said 30 to 40 days. It took 40 days exactly. I did another one where they said 30 days. It took 30 days exactly. I'm doing one right now where they told me to expect 120 days. So it depends on that particular lender's process, but it's definitely, if you're going to save $250,000 to $500,000, it's worth the wait if you can get the seller to accept this process. The benefits to the seller is it actually helps them sell their home fast and for the most money. They don't have to make any concessions. They have a certainty of the sale. And they still have their VA eligibility to go buy another home, even at a higher price point. You really can't take that low interest loan with you. So why not make it work for you? And we know how to do that. So just so you know, not all real estate agents are the same. Not all real estate agents have this expertise or background. So if you are thinking of making a move, give us a call, 719-301-3900, or go to barbhasthebuyers.com. Richard?
You're listening to Your Real Estate Voice with Barb Schlinker, host of the program and owner of Your Home Sold Guaranteed Realty. And if you are thinking of making a move, simply call Barb 719-301-3900 or visit barbhasthebuyers.com. We'll take a short break. When we come back, we'll be discussing how to sell a home fast and do it for cash, plus Barb's hot new listings. Don't miss any of that.